So once again, welcome everyone. I see others have joined as well. So once again, my name is Yogesh, and today we'll be conducting a webinar on FOMC's monetary policy changes and economic projections. And it's an important day today because today is a central bank, U.S. central bank, which is called Federal Reserve, is meeting today and is going to decide on the interest rates of US. And over the past 2 years, this has been a very important topic because interest rate decisions have influenced stock markets, they have influenced the value of dollar, gold, and will also, if we get time, will go through the live platform and see that how in last 2 days the prices of commodities, stock indices, and currencies they have changed ahead of this meeting, and that would point out the significance of how important and how significant this particular meeting is, and why we are having entire webinar in this. Right. So let's try to understand first of all what FOMC is, and before that, there is something called we are going to expect it out of commodities or currencies or any sort of ideas to diversify your risk. Please make sure that the markets are subjected to a lot of volatility, especially during Fed meetings, especially during live events. So please make sure that if you're trading, if you are taking a trade during these kind of events, you put your stop loss, you cover your risk, and please talk to your risk consultants, talk to your financial consultants before you enter into any trade during the FOMC meeting, because you will witness a lot of volatility. And without saying, it should be understood that the markets are really volatile, and if you're not careful during the event, if you're trading and you're not putting a stop loss, you may experience a higher amount of profits or losses. I mean, profits is not a problem for anyone, but losses, yes. So please be very careful, and whatever we discuss today, it's only for information purposes. Please do not consider any of my insights in a form of a recommendation or suggestion. These are only for information purposes. You're most welcome and more about how FOMC works and how central banks work. We are more than happy to conduct a one-on-one session. Inflation targeting. So to understand why FOMC matters, what is it? I have still not told you what it is, and I'm going to tell you what it is. But before that, we need to understand something called as inflation targeting. And inflation targeting as of now, it appears to be a very economic term or a very complicated term, but it's very simple. And inflation targeting is something which has been existing for the longest time, and it is one of the reasons that why we always uh, try to have stable inflation. We don't see hyperinflation in our country, but there are a lot of other countries where inflation has actually crossed to levels which are beyond understanding. So policy measure which is taken by central bank, and what central bank is actually doing, they're controlling the flow of money, or basically the money supply in the economy. So I'm sure everybody must have heard of the term monetary policy and fiscal policy. So fiscal policy is about changing taxes, which is done by government, and monetary policy is about changing interest rates, and that is only done by the central bank of the country. So every country has a central bank. US has a central bank which is called Federal Reserve. Japan has a central bank called Bank of Japan. India has a central bank called Reserve Bank of India. Uh, China has a central bank called People's Bank of China. UK has a central bank called Bank of England. Australia has a central bank called Reserve Bank of Australia. Then there is Reserve Bank of New Zealand. There is Swiss central bank, and like that, every country has a central bank. And what central bank actually does? Central bank conducts a lot of functions, guys. So you have to understand, like in case of UAE, Central Bank of UAE is the central bank which regulates all other commercial banks. Which are commercial banks? Say Emirates NBD or ADCB, FAB, National Bank of Abu Dhabi, like that. So all other banks are commercial banks, but there is one central bank which is regulating all these other commercial banks. And sometimes central bank is also called as a lender of the last resort, which means at some point of time, if commercial banks need to borrow money, central bank can lend money to the commercial banks, right? Also, central bank is involved with something very crucial, and that is printing of currency. So central bank controls the supply of money in the economy, and that is the reason that when it comes to inflation targeting, which means controlling the supply of money to control inflation, central bank is very closely involved, because inflation is something which can make an economy or it basically can break an economy. Take examples of countries like Venezuela. Take examples of countries like Zimbabwe. All these economies have been flushed out, have been in a major crisis because of high inflation. At this point of time, if somebody in Venezuela receives the currency, they very quickly convert that currency into a commodity, like a piece of bread, because they know that the value of the currency is not going to be the same the very next moment. That is the power of inflation. That is the fear of inflation, and that's why inflation should always be stable, and steps should be taken to control inflation, and that is what inflation targeting is all about. There is a certain target in central bank's mind, and they want to make sure that the inflation remains around that target. So through monetary policy, which means increasing the interest rates or decreasing the interest rates in the economy, what central bank does, is, especially in case of US, what Federal Reserve does, they try to reduce or increase the inflation to ensure price stability, to ensure economic growth. And this is really important, guys, because uh, inflation targeting, it will help to maintain the prices of commodities, prices of goods, right? And affordable prices, it makes an economy to become more and more competitive, right? It helps the economy to become more and more efficient in producing goods and services. So this is very important for a long term sustainable economic growth, right? For any developing country, for a developed country, GDP can only increase if the unemployment levels are low, economy is growing, prices are stable, and inflation is under control. And that is done by doing inflation targeting. And inflation targeting is done when central bank increase or decrease interest rates. In case of US, because US is one of the most important economies, so when central bank increases or decreases decision, it impacts overall world. So you take example of UAE. Every time the US central bank increase or decrease the interest rates, UAE central bank follows that, right? So it is really important that inflation targeting should be done. And again, every central bank has a threshold for inflation. They have a target for inflation, and monetary policy changes helps to achieve that target, right? And again, it's really important to control the financial system of that of the particular country, and monetary policy helps to do that. And I'll give you one example. Just consider, let's say, for example, the chart which you see at the moment, and this is important. And I'll give you a very real life example. If anyone has seen in last 1.5 years what has been going on with the US inflation, the consumer price index or the inflation data for the US, it went up to a 40 years high, almost to 9.1% in just 1 year. From 2%, 3%, it went to 9% in just 1 year. And that was the result of continuous injection of cash into US economy post pandemic or during pandemic, which increased the supply of US dollar, and then reduced the value of dollar and that resulted to an increase in inflation. And during the same time, the Russia-Ukraine war also started. So the gold prices went higher due to uncertainty. There was a crisis in energy prices also because Europe got involved. So energy prices went up. So we saw inflation spiking 40 years high. And last, when we saw, I think month ago, 2023, we saw that inflation from 9.1% has come down near around 4%. And that is really important because in last 1 year, central bank has continued to increase the interest rates to reduce the money supply. So to give you a very simple and layman context, what happens if central bank increases the rates? And what are these rates we are talking about? I'm talking about interest rates. What are these interest rates? So interest rate means here, in case of central bank of US, we talk about lending rates. The rate at which central bank would lend money to the commercial bank, and then commercial banks would lend that money to the end consumer. What it means when you apply for a loan with a bank, and when you get that loan, you pay something, right? You pay an interest rate. So that interest rate has to be decided by the central bank, that at what interest rate you will borrow money. So if you borrow money to buy a car, you can buy a car, you can use bank's money, but then you have to pay interest on it, right? If you are buying a piece of property, if you're buying real estate, you borrow money from a bank to buy real estate, you have to pay interest rate. So the rate at which you will be paying is decided by the central bank. And this rate decides the course of inflation also. So what happens when the central bank sees that the inflation is going higher? Inflation is going higher means the prices of food commodities are increasing. Why the prices are increasing? Because people are demanding more, because there is more money in people's pocket. So what central bank does to reduce the inflation a bit, they need to take money out of people's pocket. They need to reduce the supply of money. They need to reduce the flow of cash in the economy. So they want to reduce down the economic activity. And this is something, guys, this is really important. So hear this out, because what exactly happens is, uh, to adjust the interest rates, central bank has set a target, right? And that target is the rate at which the all the banks will lend money to each other, and then that money will come to us at a certain interest rate, right? Now, again, there is a target rate set. Now, what will happen in this case? If the, as I said, if the economy is growing too rapidly and the inflation starts, now to combat that, what the central bank will do, something called a contraction monetary policy. Now, how that contraction policy works, the word contraction means reducing, right? And reducing the money supply is very, very important, because what they do, they increase the interest rates. They make credit more expensive, right? Now, if the loans are more expensive, you as a consumer will think before you borrow. So if you had to borrow $1 million, you will probably borrow less because you know the interest rates are too high at the moment, right? So like this, even businesses slow down and the entire economic activity slows down. Now, a slower economy, it restrains businesses from increasing prices, because anyways, if the economy is slow down, the businesses will not raise prices, because otherwise they will lose customers, right? Sometimes during when the economy is restrained and when the economic activity is down, a lot of businesses reduces the prices also, right? And when they lower the prices, it attract consumers, and that create a contraction in the inflationary pressure, right? So it's very simple. Central bank increases the interest rates, so the businesses borrow less. When businesses borrow less, the economic activity around the world reduces, because less borrowings means less expansion. So the economic activity reduces. When the economic activity reduces, businesses, they cut down the prices of the products to attract more consumers, because already the economic activity is less. So they don't want to lose the consumers by increasing the prices. So they reduce the prices, and that's how the inflation is controlled. On the other hand, if the inflation is too low, what central banks would do? They will reduce the borrowing rate, which means now you can borrow at a cheaper price, which means you will borrow more, you will expand more, the economic activities will increase, and businesses can raise the prices, and everybody will be willing to pay that price because everybody has money in their pockets due to lower credit rate or due to lower borrowing rate. So, this is how high and low interest rates can control inflation, and inflation targeting is done by central banks, right? Now, I keep saying that central bank increases the rate, central bank reduces the rate. As I said, central bank has a lot of functions to do. Okay, so what central bank does, and in this case I'm talking with respect to the US central bank, and by the end of this presentation, you will understand that why I'm talking specifically US today. So US central bank is called Federal Reserve. Write it down, note it down if you want to. This is a word which in the financial markets you will see a lot. Federal Reserve is also called Fed Reserve, Fed, or Central Bank of US, or Federal Reserve. Federal Reserve has some ways of doing this. So, controlling inflation by either increasing rates or decreasing rates depends whether you want inflation to go higher or lower. So, at this point of time, as I told you, that inflation is almost 40 years high, and Federal Reserve has been increasing rates very aggressively in last 1 year, up almost up to 5%, and they have controlled the inflation from 9%. They have brought it down to 4%. Right now, Federal Reserve has made a very specific division to discuss on interest rates. Okay, and sometimes this particular division, when they increase the interest rates or when they decrease the interest rates, this is also the division which can do printing of currencies. They can inject more cash in the economy to increase the supply of money. So how will you increase the supply of money? Take a very normal example. uh, Either you make credit much cheaper, that is one way. Second, you sorry yeah, you make the credit much cheaper, so the supply of money increases. Second, you print more currency as a central bank and inject into the economy to increase the money supply. Printing of more currencies and tweaking interest rates up and down, in financial terms it is called open market operations. Please remember this: open market operations. So increasing and decreasing interest rates, printing more currency by central bank, these activities are called open market operations. Now, Federal Reserve to has made a separate division to deal with these open market operations, and that division is called Federal Open Market Committee. Federal Open Market Committee, which is called FOMC. So Central Bank of US, which is Federal Reserve, to control inflation and do inflation targeting, they have made a separate division, and which is called Federal Open Market Committee, or FOMC. And this is a very, very important term, guys, because FOMC, basically it's a short for Federal Open Market Committee. This is the decision making body which is responsible for monetary policy within the entire Federal Reserve System in US. Now there are 12 members, 7 of them are board of governors, 5 of them of the 12 Reserve Bank presidents, and then there is one chairperson in FOMC which is on the board. He also serves as the chairperson of the committee, right? And the chairperson or board of governors chair this 2023, he is Jerome Powell. You need to know this name, Jerome Powell. You will hear it a lot of times because he is the key person. He is the chairperson. He's the board of governors for the Federal Open Market Committee. Jerome Powell. Before Jerome Powell, it was Janet Yellen. Before Janet Yellen, it was Ben Bernanke. Before Ben Bernanke, there was. So the Fed chairperson keeps on changing with definitive terms. And every Fed chairperson, when they come, they do certain changes in the monetary policy. And a a chairperson who increases rates very aggressively is called as a hawkish chairperson, and the one who does not support aggressive interest rates is called dovish. Hawk and dove, just like the name suggests. Why I'm using these terminologies, guys? Because a lot of times when you read the news, you hear that Fed had a very hawkish tone, which means central bank wants to increase rates aggressively, right? If somebody says that Fed had a very dovish tone, which means they don't want to increase rates very aggressively. So this is something which you will hear a lot. That's why I'm telling you. Otherwise, this is not something which you have to remember by. You can hear it always and just have a very casual glance over this. So Federal Open Market Committee is the actual division where Central Bank of US, so they do these open market operations. So what is Fed's monetary policy tools? How they distribute money in the economy, or how they control the supply of money, how they reduce the supply of money. Open market operations, as I said, they can print more currency or they can reduce the currency by selling government bonds. Second, discount rate. This is the interest rate at which eligible banks can borrow from the Fed, right? So commercial banks, the rate at which they borrow from the central bank and or Fed or FOMC can increase the discount rate or decrease the discount rate to control the money supply. Then there is reserve requirement, which means the reserve requirement is the minimum amount of reserve the banks are required to hold against the deposit. So sometimes what happens, the like Bank of Japan does, they increase the reserve requirement, right? So reserve requirements are the minimum amount of reserves the banks are required. So when they increase the reserve requirement, the banks would keep more money with the central bank. That reduces the money supply. If they reduce the reserve requirement, then commercial banks will keep less money with the central bank and they will lend more. So the reserve requirement is also a part of open market operations. Is one of the tools Fed will use to tweak the interest rates. And then interest on excess reserves. So like this, we have seen, guys, that central bank over the past, just to give you a brief history of how central bank has actually worked back in the past, because this is something today is one of those FOMC decision, and the central bank and the Fed was established in 1913, and during the early years, interest rates were largely used to stabilize the economy during turbulent periods like World War One, Great Depression, right? Focus was on basically maintaining stability. Now, in 2007 and 2008 financial crisis actually prompted a very significant change in the Fed approach. So when 2008 crisis happened, economy was struggling. Central Bank of US, Federal Reserve, using FOMC, they dramatically reduced interest rates, which stimulated a lot of borrowing. And that was basically done to avoid the economic collapse. And that was really, really important because following the financial crisis, Central Bank of US, Federal Reserve, introduced a zero interest rate policy. And they provided support to the economy, which means you can borrow, you don't have to pay a single penny, right? So interest rates were kept very close to zero to encourage more borrowing, to encourage more investments. And as the economy recovered, Federal Reserve began gradually raising rates 2015 onwards, right? So this is something which is really important, guys, because from the very early days to the present, the Fed's approach to interest rate has evolved now. So then, as you said, that when inflation is going too high, now there has been a lot of meetings which has already been done. Fed normally meets 8 times in a year, and there are final 4 meetings I think left in 2023, and Fed has a lot of decisions to make whether the interest rates will be increased or not. They have already been on the higher side, around 5%, and now the central bank has to take decision. There is another meeting of central bank, and the central bank has to take this decision whether the interest rates are going to be increased or not. And this is going to impact a lot to gold, to stocks, to dollar, to commodities. So if you are a trader, if you are a long-term investor, if you are a wealth manager, fund manager, If you are into financial services at all, and if you have a portfolio, it does not matter whether you have money in Indian stocks or US or Europe, the central bank of US, whenever they take a decision, it impacts the entire world, because stock markets, a lot of equity or stock markets like Europe and UK would follow US. So if the interest rate is if the decision on the interest rate is in the favor or is as expected, then there may not be much changes. But if any surprises come in, it might impact the stock market as well. So today, you have to be very careful, and I would suggest all of you to have a look. There are on YouTube also, you can look. There is a live streaming which will happen. Needless to say, guys, if you have any questions about what we have just discussed, please continue to ask anything which you don't understand. I'll try to answer you right away, because this is really, really important. And it's a very, very important topic. Because what happens is, uh, and why US is mostly important, because if you see, uh, top companies, major markets of bonds, major markets of stocks, the liquidity is into US markets. Top companies like Amazon, Microsoft, Google, all of these companies, all of these stocks, they react. So that's why US central banks are very, very important. And the interest rate decisions also, which happen, are also very, very important. So today, what we have to understand is the next FOMC meeting, as I said, it is going to be in the next 2.5 hours, around 10 o'clock in the night. You will see the interest rate decision coming in. Right now it's 7:30. So especially in the next 2.5 hours, around 10 p.m., the interest rate decision will happen. Now, the major understanding and the expectation, as we see, as I said, the Fed interest rate decision is due today. And in last inflation data, what we witnessed was that inflation was coming down. Now, that's a good news if inflation is coming down, and a lower inflation support stock markets. It supports gold prices going higher. Also, again, the gold prices are mostly impacted by a situational call, not necessary that it will always go up, but yes, because a lower inflation means that the money supply at one point of time, which was increased, which was reduced, has brought the stability in the prices, right? And inflation is coming down, which means that the central bank will increase rates further, or they will be uh, pausing the rate hike. So this is important now, because what today's decision is all about, what is going to happen to the US federal funds rate, or the rate of borrowing, or the rate at which central bank lends money to others. Basically, if you go to the bank and when you borrow money, at what interest you will be charged when you borrow money, right? So federal funds rate is really important. It is expected that a rate of, so currently the rate is around 5.2%, and the probability of a 25 like basis points rate hike, which means if it is 5.2, 0.25% is expected to be increased. Almost 99% probability is that the federal rate will be increased by 25 basis points. But however, since the meeting is live, the discussion of the FOMC members could also affect the market. What does it mean? It means that the rate decision comes out at 10 p.m. But after that, 10:30 p.m., the press conference begins. Now, traders, be very careful when I'm talking to you here. This is really important piece of information. 10:30 p.m., when the press conference happens, is when you should listen to it, because any trades you put before, it will be very volatile. Because during the press conference, there could be questions asked from Jerome Powell, that what is your next anticipation of interest rates? Are you going to increase it or decrease it? So during that particular time, during that press conference, market fluctuates a lot. And it is strongly recommended to all the investors that either you put stop losses on your trades or do not trade at all. Because during this event, when the central bank is announcing interest rate decisions and the future path, future course, that how the interest rates are going to be shaped up, you have to be very careful because the volatility is unexpected. It can be very brutal. It can hit your stop losses. So try either not to trade, wait till the press conference is over and the dust settles so that you can finally take an investment decision. So this is something which is really, really important, guys, because a lot of times, like I'm giving you one example of Indian stock market, Sensex, basically, we have seen that how post to a US federal policy announcement, how Sensex mostly moves. So in December 14, 2022, there was the announcement by central bank, and we saw next day movement down by 1.5%. We saw February 1, 2023, as I said, we saw February 1, 2023, and we saw that uh, there was slightly 0.3% increase in Sensex. March 2022 down by 0.5%, May 4 down by 1%, and then June 14th down by 0.5%. So central banks, US central banks interest rate decision can impact other markets also. And that is something which is really important, guys, and we should always understand the significance of it. Now, let me quickly take you to the live platform, and let's see that how in last 2 days the prices of important instruments which can be affected by the decision has moved. I'm just going to share the screen with you right here. 1 second. Until then, please, if you have any questions, please do ask. Just 1 second. Right here. So I'm just showing you the live platform, CenturyTrader. You can log in and you can get a demo account as well, and we'll go through understanding. Just give me 1 second. Right. So now we are looking at the live platform, guys. It's open. I hope everybody can see this. If anyone, let me just open this right here. So I'll start with some basic instruments which can be really impacted by the central bank decision. Let's start with gold, for example. Gold is right here. So if you see today gold price, it is measured in dollar for 1 ounce, and this is $1,973 for 1 ounce. Let me show you the chart, and why I'm showing you. Again, I'll just show you last 12 hours how gold has moved, and this is ahead of the interest rate decision. So 10 p.m. the interest rate decision comes in, okay, and look at this. This is, it was somewhere around 1960, right? On 25th of July, 26th, 26th, and then look here. So morning 4 a.m. onwards today, 26th July, on the day of the interest rate decision, from 1964, gold went up for the first 4 hours, then another second 4 hours until 12, and then see another. So look at this last 12 hours, gold has been going higher ahead of the central bank meeting because it is expected that the Fed will increase rates by 25 basis points, which is already anticipated and that is already priced in. So unless there are any further surprises, or in the press conference central bank says that yes, we have seen inflation coming down and now onwards we can reduce the rate hikes or keep a pause on the rate hikes. If either of these news comes out, gold prices might go higher. So this is really, really important, guys, because gold ahead of the central bank meeting, we were seeing it very range bound. And as we have seen that gold prices have got benefited from a very dovish narrative. Dovish means from a very unaggressive or not aggressive narrative by different central banks, because inflation readings in US, in Australia, New Zealand, UK, they are very much less than the forecast. So this has actually given rise to a possibility that all these key central banks might be soon hitting a pause button to their rate hike mission, and that is really, really important, right? Because at some point of time, if that happens, we will see gold prices pushing higher. That is something which happens. And again, apart from inflation, the somewhat weaker than expected jobs report has also played a really important role in pushing gold prices higher. So this is one of the important things. Even if you see the dollar index, the value of dollar against gold, it has actually reduced. And if central bank does not give any additional surprise on the aggressiveness side, if I'm at this point of time, the anticipation is very simple, uh, that central bank will raise rates by 25 basis points, and probably in the press conference will talk about that how inflation is coming under control, and possibly in the future they may not be that aggressive to increase rates. So that is the narrative which everybody is expecting today. You can actually see the central bank meeting live at 10 p.m., followed by a press conference. You can just go on YouTube or search the live screening, and you'll be able to see it on Bloomberg, on CNBC, anyways it comes across. So you can always see that. Now, very important, this is gold. I'm just going to also have a look at GBP USD, because in last 2 3 days, euro, let's say euro first, euro versus dollar, right here. So if you see euro also, if you see euro has also been increasing slightly. In last 2 days, euro and pound both fell because of poor fundamentals data. The manufacturing services in UK and Europe were very low than expected. So if you see this real close, and I'm looking at a day on day basis, so this is every candle represents one day. So if you see last 4 5 days have been very disappointing for euro, but finally it is reaching to a support line here where a lot of buyers could probably enter 1.09 levels, and right now it is around 1.10. But a green candle has started forming where we can see that ahead of the central bank rate decision, euro has also started going up. And if you see pound here, GBP versus dollar, so if you see pound also is up by today 0.2%, and see this is again day on day. And if you see the chart, look right here, yesterday till today ahead of the Fed meeting. So if you see, every currency is anticipating against dollar to tend to be getting more stronger because inflation is under control and everybody is expecting a very dovish remark from central banks. And if there is a surprise, if central banks try to go aggressive and announce that interest rates will continue to increase, then we can see decline in the gold prices. We can see dollar getting more stronger, and we might see euro and pound going down against dollar. So this is important, guys, because again, as I said, this is not a recommendation. This is only for your information purposes. It depends on the outcome of the Fed that where it will lead to. If you have placed any trades, please put a stop loss. This is really important. And if you let me show you the stock markets. I think the best way to see is S&P 500 and Dow Jones. So look at S&P 500, for example, right here. See, down by 0.1%, but in last 2 3 days, if you see, because there are two things going on. For those who don't know, this is July, the month of earnings season. All the companies, bigger companies, financial tech companies, all of these companies, They have started showing results of last 3 quarters, last 3 months, or last 1 quarter. And if the earnings are better than the Wall Street estimates, the stock tends to increase, and so does the index. So July meeting is really crucial because stocks have been going up in last 3 4 days because of good earnings, but at the same time, an aggressive tone by the central bank could push stocks down. So if you see at this point of time, the movement is really mixed among the stocks. Not much volatility, but during the Fed press conference, you can actually witness tomorrow or in the later night that how equities will move depending on what central bank says. So that is something, guys, which we have to really understand. Uh, these kind of meetings, especially central bank interest rate meetings, these are very important to witness as an investor, as a trader. And as far as the trading and positions are concerned, is at this point of time, uh, first see the interest rate decision, see the press conference, and only then move forward with any trade or with any understanding. I think that is the most important part which you have to focus on. And the interest rates are already 22 years high in US. And the expectation for Federal Reserve to raise interest rates, and since March 2022, and if you see now, this will be the 11th time that Federal Reserve will be increasing the rates. And most important part is the press conference at that 10:30, because that is going to decide the future course of Fed, or any hints if they throw, whether it is the last rise, last rate hike of the year, or there are more coming in, right? Because last month they skipped the rate increase, and central bank, as I said, it's widely expected to increase the rates by 25 basis points, and that would increase the interest rate from 5.25 to 5.5. Now, markets are definitely looking whether there is further signal and whether this is a final interest rate hike or there are going to be more, and that is going to decide the course of how the stock markets are going to behave. Because this is something we have seen in last few years, that whenever the interest rate hikes happen and there is aggressive tone, we see central banks coming up with a very aggressive tone, stocks come down, and whenever their tone is not very aggressive, stock markets go up. So this is important, guys. I think just have a look at the meeting, and I think that would be enough if you have a look today. Because after this session, there will be a lot of things which will be clear to you, right? Uh, as far what we have discussed, if you have any questions, please ask me. You can use your chat options to write it. Anything which you want to know, anything very basic you feel, because this is right from the scratch. If you have never seen a Fed meeting before, this is exactly everything you need to know, that how Fed meetings actually work and why and what is the significance. I explained to you what is inflation targeting, what role central bank plays, what is FOMC, what are open market operations, what has happened in the past, what is the probability now. Just to again brief you once again, what was the reason of a higher inflation, 40-year high inflation, which made Federal Reserve go so aggressive on increasing rates? That happened because of the pandemic, and we all saw a very bad phase of pandemic. And during the year of 2020, that was the time when we saw that there was the all the central banks across the world actually reduced the rates, and they started injecting stimulus, injecting more and more cash in the economy. And that was done to support the economy, because pandemic happened, there was lockdown, there was nothing else which could happen. So central banks started printing more currency and started injecting more currency. And that later on caught up, followed by Russian-Ukraine war, which increased gold prices and energy prices. And initially, when central banks saw that inflation was going higher, they thought that it was transitory and they did not react on it. But when they saw that interest rates have gone, the inflation has gone up and it's not coming down and it's only going higher and higher, they had to come up, barge in, and go very aggressive on rate hikes. So that was another reason Fed did not recognize the urgency of a high inflation. So this was the reason that why it happened and how it impacts your investment. If you have invested in stocks in US, if you have position in gold, if you have position in oil or US dollar or any currency, you should definitely be checking the FOMC meeting today. It will be at 10 p.m. and Fed meets 8 times in a year. And after July, I think they will meet again in September, October, and then December. 3 or 4 meetings will be left, and that will again bring a lot more volatility. So I look forward for any further questions. Somebody just asked that can we get a demo account? Yeah, definitely. You can get a demo account. You can just talk to your relationship managers, and they will provide you one. And it's actually a good idea because on a demo account you can see that at time when the clock strikes 10 and then press conference starts at 10:30, you will be able to see that how volatile the markets are going to be. You can see gold prices, stock prices, and all of them. And yeah, I think demo account is a really good idea. Another question: are you available for a one-on-one session? Yes, definitely. I'll be available for a one-on-one session. If you're interested, please talk to your RMs. They will check the timings of yours, and then we'll fix up a session. And most importantly, you are most welcome to visit the office. And the entire team is sitting here. We are seeing the FOMC decision live. So even if you want to come down and have a look, sit with your RMs, they will definitely help you out, assist you, and you can even see the live movements happening post FOMC. So it's a very, very important day, and now you know why. So definitely, yeah, I'm available for a one-on-one session, and we can always discuss more because we do these webinars every week on different topics. Last time it was on the psychology of the trading. A week before that, it was about trading strategies, about designing portfolios, risk management. Next, tomorrow there will be a technical analysis session where Mr. Vivian, who is one of our important consultants and a technical analyst, will be telling you about how you use candles and charts to decide entry and exits for your trades. And the week after that, we'll have something else on a different topic. So if you like this session, guys, please review us on Google. If you want us to improve on something, or if you want on a different topic, or if you like these sessions, please motivate us, encourage us, review us on Google under Century Financial, and we'll continue to do more and more sessions like this. For today, please do watch the FOMC meeting live at 10 p.m. Dubai time, followed by a press conference at 10:30. And if you have any other questions, please reach us out, talk to your RMs. Let's fix a one-on-one session. We can meet on Zoom, Microsoft Teams, or you want to come to the office, and we can do a session, and we can be more and more. We can learn more and more information about trades, about different asset classes, and anything you like to know about. So once again, my name is Yogesh. Thank you so much for attending the session. We'll see you next week with a different topic at the same time. Good night and have a great day. Be safe, have a safe trade. Please put stop losses and have a proper risk management schedule.